Hello, everyone, and good evening. Welcome to USA East Coast Trading Group, week 4 of our webinars. Today, we are going to have an interesting discussion about a review of the entries and exits that we were practicing last week. And we're going to have a question and answer session as well as a practice starting at 6 p.m. when the market opens. So, how was your weekend? I hope that everyone had a restful weekend, is ready for the week upcoming to trade the markets. Monday, tomorrow is supposed to be somewhat of a quiet day, but that's kind of relative right now because of all the exciting news events that keep popping in the news, but there are no major announcements scheduled for next week. So we're going to stay off the trading live until Tuesday. That's a good observation from me saying that tomorrow is closed anyway because of the bank holiday. Okay. So let's start. Right here on my screen, you'll see I've provided a screenshot of the Nadex market view when you go on to nadex.com. I won't go live right now to the Nadex demo just because their platform is usually closed until the market opens, so we won't have this view. However, I do have screenshots from my trading practice, and so here's one of them. And this is just to show you how Nadex measures the winning trades. I did say this on last Friday, but just to go over it again, this right here on this side, on the contract side, are the is the price ladder. As you can see, there's 5 for each. So it's different than the broker spot option, where you have only 1 point that you have to decide greater or less than. Over here is the indicative price on the right side of the screen. As you can see, USD JPY has 3 percentage points or decimal points, and the USD have 5 percentage points, which decimal points, which decide what is a winning trade and what is not. If the last number in this decimal, if it is 0 and it matches, let's say if it was 0.7570, then that would count as a winning trade for everybody who placed a bid or a sell, or as we often say in the broker terminology, put. Okay. If it is below the last digit is, let's see, I'm trying to find one that is below. Okay, I guess this one would be a good example. 2499. Yeah, if the last digit is below the contract level or price point, then that also counts as a win for the bids or sells. If it is 1 point above, let's say if it was, let's see here, if it was 757.1 or 7501, okay, so even if it's 1 decimal point above, all those fall in favor of the offers. So whoever purchased an offer or made a call. All right. And this is an important point. You'll see that it differs greatly from the way that those market maker or brokers have their indicative prices shown. Usually they're only showing you these last 2 decimal points for the USD/JPY and the last 4 decimal points for the USD in their indicative price, or let's say the price that is changing constantly before the timer expires. And that's one of the ways that you can tell that the broker's not being honest with you and that they're market makers and they're taking advantage because they're holding back from you the actual winning rate. Because for them, if they were really submitting the orders to the bank, they would have to comply with the exact same rules as the exchange. So it's not good enough for it to be an at-the-money trade. It has to be above. And if they're hiding that from you, where exactly is that? Is if it's 250, 251, for example, then that just means that your trades are not being honored. And it's unlikely that you will profit in the long run from being a member. However, Nadex is an exchange, so it's just a neutral marketplace. They gain money from you going into the trades. And for every trade that you place, they charge the $1 fee. Okay, so let's go on to the trade entries. We did go over that a little bit last week, but basically what it is you'll see a signal that I'll post on the chat room, and the signal will have to do with one of these price points. All you do is you click here, you can also click on this, and it'll bring a pop-up that looks similar to this, okay? These usually take about 5 seconds to appear. And that's why you want to be well prepared and be looking at your charts and your indicators so that you can more or less gauge if it's going to be a call or a put that you'll have to place. And so you might have time advantage if you already know where the price is going. You might already be ready to place a certain call, place a certain number of trades. Now, that 5 second period can be an issue when we're getting out of trades. And that's the next point in today's webinar. Yes, that's right. So when you get into the trades, they charge $1. They also charge $1 to get out. Let's see, what did I want to say? So it just skipped my mind. About the exits. Well, let's just go on to the exiting of the trades. Now, when you want to exit a trade, there's a couple ways. Well, there's actually 3 ways to do it. And once the market opens, we'll go over the third way. But for now, we'll deal with the first and second ways, which is number 1, to wait until the time to get out of the trade. Let's say if we bought this at 20 and it's going to 40 or 60, and we see that there's indications that the trade position might reverse. So we want to get out at a profit. And so we click in our working order section, in our open positions view, we'll click the ticket that we already have working, and then a pop-up will appear. Okay, it takes 5 seconds again for that pop-up to appear with a price. All right, ideally, what we would see in the pop-up looks like this. So let's say we purchase this at the $20 here. Let's see, let's say we purchased this, let's see, GBP USD. Okay, let's just say this was it, all right? We purchased at $17.75 and now it's $88. So we want to take our profit. Ideally, we would see two prices. Why? Because in order to get out of the trade, there has to be that other trader on the other side that has an offer, number one, and number two, that there are enough. So if we put in this case, let's say 37 purchases, if we bought 37, a size of 37, and on the other side, there's only 20, okay, then only 20 of our trades will get taken out. The next person that makes the bid, let's say there may be another trader that has, 5 more and so on. So you'll see that if you make a large trade size and you're trying to get out, some of them are going to process depending on how many is being offered at the time, and the others portion will go into your working orders, and as soon as someone else comes in with a similar offer, then it'll get bought out. Okay? So the thing about the 5-second wait is that it's not always convenient, especially if the market is moving very quickly, with reversals. And so just to get out of the ticket at the moment that we see that we're in our ideal or semi-ideal profit position, that may not work out in 5 seconds. Plus, these prices on each side, they're constantly changing. So what you have to do, if you have it open, let's say prepared, or even if you're opening it immediately, and this price is, it's 79, 25, 70, 78, so on, you have to click here and then click place order or submit. Okay, you have to click on these both places to make sure that you have the most current price. Otherwise, it's going to go into your working order section, the entire one, and then it takes 5 more seconds to get out, for that pop-up to appear. And then, it's pretty much the whole operation all over again. And meanwhile, you could be losing profit or you can be experiencing a loss. So that's one of the issues that people have had with Nadex. It really favors traders, as far as the operation of their website. It favors people who are putting on longer intraday trades of about 4 hours, or they have like weekly trades and so on, where it's pretty much a relaxing experience. You just go on and place that trade, and then just wait, and then you can be monitoring the market and getting out in the last 30 minutes or so. But for us who are used to the 5-minute time frame, that 5 seconds can mean a whole lot. So what I try to do is the moment I place a trade, I click on the opposite, I click on the ticket and just keep on clicking on the opposite side. Let's say, like I said before, if we had purchased it at 17, I just have this ticket open and I'm just clicking here, while I'm waiting for my profit to happen, and then I'm placing the order as soon as. That can be challenging when you have several tickets open at the same time. And as well as the fact that, having to click like that, it's can become annoying, and then can cause a little bit of like carpal tunnel after a while, So what I've noticed is that you can actually place a price here of, let's say if it's on the bid size, you can place $1. You just put a 1 here, and then click submit, and that'll exit you from the trade. If you placed a sell to get in, let's say right here, you placed a sell, then obviously you would want to have 99 in the dollar area before you click place order. Okay. That's a secret that Nadex is not telling anybody about, but that's the fastest way to get out of a trade, and we'll see that happen at 6 p.m. So let's see, I had one. I think it was. Okay, the meeting is ongoing. Right. Let me check your messages. Let's see. You want to sell as close to the floor price. You want to buy as close to the. Okay. Yes. So thanks, Ms. Sang, for reminding me. Let's see here. I'm trying to find another screen. Oh yes. So here we have two columns. Okay. As far as profit and loss, let's discuss what these values actually mean. On the right side, we have the offer prices, or the call positions, the buy positions. These numbers here represent the actual amount of funds that you need to invest. Now, for the other side, on the other side of your screen is another trader, and they have put up, say in this case, they put up $100. They put up the full $100, but $80. They sold it at 80. They're selling it at 80. And so you're buying it at 20. And if the price does not expire in your favor, if this indicative does not expire in your favor, then you lose $20. Okay? And they win that $20 from you. Okay? They've put up $80 to take your $20. Okay, let's see. Someone seems to need to have the. Okay. So yeah, so they're putting up to $80, and if you lose the trade, then they take your $20. However, if you win the trade, if this price by the expiry, or let's say during profit, ends in your favor, then you win those $80. Okay, and then the full $100 will show in a ticket that they send to you, a receipt that they send to your email. Now, on the left side are your put prices, or bids. Okay, it's going to show up on the ticket as a sell. Okay, sell. And these numbers here represent minus $100. So if you clicked here and opened a ticket to sell at $11, can you guess how much money that you would have to put up, that you would have to have in your account in order to take this? Can anybody guess? If you clicked on this and it's right, exactly. So you would have to put up, in this case it would be 88.25. 88.25. You'd have to have 88.25 in your account in order to place this trade. However, on this side, you only need 20. Okay? So you'll notice that some of the trades in the bid, let's say when you pull up the ticket, let's see if I can find the screenshot. When you pull up the ticket, it'll show see if I can find a screenshot that makes sense. It'll show, you know, profit on one side, loss on the other, and you'll see, wow, that is an amazing profit loss situation. Well, you know, you have $1,000 on one side, and then it might just be $15 or something crazy on the other side. The reason is because of the fact that it's a minus 100 here, minus 100, okay, or plus 100. So the price that you get in is just as important as the location. The location of the trade. And the more parity, the more these numbers equal 50, the closer these are to 50, let's say here, like 47.50, 55.50, that means that you'll see in the profit and loss that they're pretty much equal, because you're only investing about half of that 100, okay, per lot, per size. So if you do 20 of these, then it would be 50, you know, roughly 50 times 20. Okay, and then the profit and loss section of that pop-up is going to show the respective values. I'm trying to find one where I had 1,000. I know I posted a couple to the group. Okay. But you'll see it, how that one side will say, you know, like $15 $15 loss, or $1,000 profit, or could say $1,000 loss to $15 profit. Let's see here. Exactly. Exactly. Thank you, Terry. So yeah, you know, and this has to do with the location of the trade. It would not make sense for us to place this trade because we're risking, you know, $1,000 because of the location of the price on the charts. We would be risking $1,000 to have a maximum gain of $15 for whatever that expiration and may be. And if we, let's say, enter the trades only to take profit, in other words, not waiting for the expiration, if we're going to have a stop loss, you know, open the ticket, I would say that's too much risk. So, you know, we might have a profit of what, $10 or $5 on the way to getting to that point where, you know, that people have greater confidence on one side, and it's not worth it anyway. However, if we know because of our skill of looking at the charts, and this situation is reversed, where our maximum profit is $9.85 and our maximum loss is $15, yeah, of course, it's a great opportunity. Okay, and the possibility for the maximum profit to exceed the maximum loss by wide margin exists for both the sell side as well as the buy side. On the sell side, the prices that we want to see up here are 90, 95, you know, 80, 85, something around that. Even 70 can be good. But of course, the price that you enter the trade is going to be higher because of how many, you know, how many units you're purchasing. Okay. The prices on the offer side that we want to see are, you know, in the low to upper tens, the teens, 20, 30 is good. The higher the probability for a trade to work out, the higher that price is going to be. Okay, so the best opportunity, the most profitable opportunities that we have are those where the market is not yet ready to assume what direction it's going to go. And, it doesn't happen very often, like every single timer, at every 5-minute interval, but it may happen every other 5-minute interval. Okay, or especially when there is an exceptional amount of volatility in the market, where it is easy, especially when there's a reversal going on, it is easy for people to underestimate the power of a certain turn, and that's when we can see these low numbers. Low on the offer side means an actual low, lower number. Low investment on the bid side means the higher numbers. So 86, above 50. Now, depending on your account size, a lot of people place trades, around the 50% margin, just because there's a consensus in the market already that they can see they're trading with other people, that a lot of people that have already agreed that a certain trade is going to work out. So that's some people's trading style, and the good combination of trading styles is what is going to grow your account. Well, Misang is asking if we sell due to market having. Well, if you sold the ticket, yeah, you can actually do that from your open positions box. So let's say I want to, let's say I purchased this at, I don't know, 50. And, now it's at 10, but I can see that the market is heading in the opposite position and in an opposite direction. And this number is going to start, rising again. Okay, so I click here, buy, and instead of just buying out those tickets, I add, let's say I put buy 20. So it's going to exit the number of bids that you put in, as well as add to your order to add more on the buy side. So let's say if you went in with 10 bids, and you want to exit as well as take advantage of the opposite direction, just click the buy. Okay, this is going to turn blue, like so. Okay, it's going to look like that. And then just put an additional number of the size here. So if you want to purchase 10 more positions, just put 20 instead of having just the 10. Okay. Yeah, the point of the buying and sell on Nadex is that you have in the exchange other traders that are saying there's going to be a certain direction in the market. Okay, there's someone else on the other side of your screen that is trading with you. It's just like a tug of war, back and forth, back and forth. The exchange is not betting against you. It's simply other traders, just like yourself, on the other side who are betting against you, and you're betting against them. Okay, and they're saying, okay, I'm going to put this much on the table to show you that the market is definitely going in my direction. And they might withdraw. They might say, oh, I'll take that back. And so you won't be able to purchase those contracts at that price. And then someone else, like right here, so this person is saying that they'll sell 20 for 10.50, and this person says, well, I'll sell 30 for 5.50. Test me. Will you give me those $84.50. Okay. If you were to purchase this at a sell for $5.50, they would take for each unit that you purchase, they would take $84.50 from your account if that were a losing trade. Okay. So I've unmuted the webinar. I only have 8 minutes, it's almost less than 8 minutes left. So I'm going to create another meeting, part 2. The reason why I have to do that is because it only allows me 40 minutes per session, because it's a free software. If I were to get the subscription, then, and we will in the future, but because I'm using the free version of Zoom, then I have to resend the invitation. So let me close this meeting now, and then hopefully you can get your microphones ready. And if you have any questions, I will be open to answering any concerns that you have.